Hey everyone, it's Rob Kientz of GoldSilverPros.com. It is Thursday, February 4th, 2021. For today's update, I'm just going to give you a quick update on what I see in the markets and on today's news and what I'm hearing from some people about what's going on in the stock market, specifically with some of the brokers and First Majestic. We'll get into that in a moment, but I'm going to go to the chart here and I'm going to show you a little nugget on what's going on with the SIL, which is the Global X Silver Miners ETF. You can see this chart. I've got it out at like a 10-year chart. We are testing about 8-year highs in the market. We had a little bit of a peak here around, what is it, 50? And it touched on 50 back last, I would say September, October timeframe. It came back down. It's retesting it again. If it pops above this, you could have a nice little run up in the SIL for the Global X Silver Miners ETF. I'm not telling you to buy it. I'm just telling you what the chart is showing. It's testing about an 8-year high here. This could be very bullish for the chart. Of course, we know since silver went above about 18 to 20 bucks, most of the silver miners have basically been able to make money, and they've started to have a couple of quarters of revenue, positive revenue. I told you this would happen last fall. I predicted, and I started this discussion around August, September. I said, once we have a couple of quarters of positive gains in the gold and silver miners, we're going to start to see some positive momentum in those stocks. And we're seeing that in the SIL, and it's retesting a high. Now we'll see if it pops through that, but it's got positive momentum. It broke both 200-day and 50-day moving average this year. So if it continues to test to the upside, we could see a nice little run. Certainly the silver miners have the profits for it. And it wouldn't surprise me. So that may be something for you guys to look at. I'm not telling you to trade this one way or the other, but it's just information and a perspective for what I see. So that's the SIL. Here's the ticker right here, SIL, Global X Silver Miners ETF. If you're interested in investing in the silver space and getting into the stocks, and that's part of what you've discussed with your financial planner, this could be one. There are some others as well, but just wanted to note that we saw really positive chart formation here. And I think it should continue, because even if silver price comes down to $23, $24, which I'm not expecting, but let's say a big smash down comes, the miners should continue to make money. So as long as they're reporting positive revenue quarter over quarter, I think overall the miners are going to do well. And I think with the upward pressure we're seeing in silver right now, I think this is very bullish for the silver miners overall. We'll continue to check the charts and see what happens there. There was an interesting story that came out today in Zero Hedge. Redditors abandoned squeezes, panic buy penny stocks. So essentially what happened was with Wallstreetbets and Reddit, they were bidding up AMC and GameStop and some of those stocks that were very heavily shorted. And the prices were going up, making some people millionaires. There's news coming out. Some of the people didn't sell at the top, and now they're losing a lot of what they bid in. And this is what happens on purely momentum-based stocks, where you don't have the fundamentals telling you that this is a good trade. For example, the fundamentals over here on the SAL are telling this is a good trade. Now, I don't know if you're going to see a 10, 20x, in it like you saw in some of the shorted stocks that were bid up recently, but there's reason to believe that this will continue to go up. When you're in a stock that goes up a lot, like a GameStop or an AMC, and it's not based on fundamentals, it's just based on short-term momentum trading, especially the gimmicks like people bidding up shorted stocks to try to do a short squeeze, a lot of times that will fall back down and that will crash. So I think there's a chart here actually in here looking at GameStop. It's fallen down quite a bit. So it's crashing after the initial bid. And that's the risk you take when you get into a purely momentum-based play. Momentum-based plays typically don't last that long. It's a day trade situation. Most people, about 80% of people over time, will lose in day trading. So just be careful there. I would look for things that have positive momentum, but also have positive fundamentals. That's just an investing tip for you guys. And it seems as though maybe the Reddit crowd and some of the other crowd is moving from most shorted stocks to most liquid stocks. You can see there's been momentum falling in most shorted stocks in February. People aren't bidding up the most shorted stocks anymore. They're going to the micro cap stocks. So the micro cap stocks, because they can be penny stocks or small stocks, there's not as much volume in those, they're more thinly traded. And people are using this as their next basically day trade or momentum traded opportunity. How far this goes, I don't know, but it could be the same thing that happens to GameStop. When you're in this short-term momentum-based trade, this day trade, a lot of times these will crash. especially when they're not very liquid. You can bid those prices up pretty easily, just like you can on some of the shorted stocks. You go after these microcap stocks, you can bid them up quickly, but they'll fall just as quickly. So we don't know how long this trend of bidding up these liquid microcap stocks or penny stocks is going to be, but just be wary. There's going to be a lot of momentum in this, downside momentum in this when it finally breaks, and it could end up looking just like GME does look right here as well. So just a little bit of a warning, if you guys want to plan that into the market, make sure you know what you're doing, you have a lot of experience. It's not something I recommend, but hey, you know, I mean, if you're in there just have complete money to burn and you want to do it, that's up to you. Not something I recommend, but that's what tends to happen. They tend to rise fast and fall even faster. This took a while to rise and it fell even faster. But this is what's happening in micro cap stocks right now. I have a Bloomberg chart here showing all this positive volume. You can see down here, this red on the chart has bid this up. So this is an aim to goose that end of the market. And as to how long that lasts is anybody's guess. But when somebody puts in a big sell order to sell these off, you could see the same thing happen in these microcaps that you see in these most shorted stocks. So just be wary there. Don't get yourself into a trade where you can't get yourself out of it and you're losing money that you need and liquidate your portfolio. These trades tend to come and go, and it's usually the guys that get in first that do better. If you're momentum chasing on something that's very illiquid or it's a penny stock, that's a very dangerous trade. You could be the patsy at the poker table and be the guy that they're taking the money from if you can't get out of that trade. So just be careful there. That's what we're seeing. One last thing on today's update, then I'm going to wrap it up, guys. Like I said, this is just going to be a quick update to tell you what's going on in the market. Gold is bid down to about 1794 on the last COMEX chart. I'm recording this about 4:20 p.m. Central Standard Time on February 4, 2021. And the great thing that I love about COMEX is they'll put out the settlements before they'll put out the volume. So the volume's not here for today, but we can see settlements, and that's even more important. Look at the settlements today. An average of 1791.20. They're 260,000 contracts of 100-ounce gold. That is roughly 26 million ounces of paper gold. 26 million ounces of paper gold. That is a lot traded on one day at a price of 1791.20, and that's why you get a closing price 1794.10. Down about 2% on the day, 41 bucks on the day. When you hit, and that's the thing about COMEX, when you drop a lot of paper on the COMEX, a lot of short paper at these type of prices, that's where your price tends to end up. So that's what you have to deal with the COMEX. For me, this would be a buying opportunity. If I'm looking at a certain gold miner, I've had my eye on, I've done the research, and you may wait a day for that price to come down in reaction to this price move in gold, then you may add to your position at a lower price. If you're buying physical, this may be a good place to buy physical. It went down 40 bucks in a day. Nice little area to pick up some physical. Maybe get into one of the gold ETFs, the good ETFs, not the GLD, which we don't believe is backed by real gold, at least completely title clear, owned free and clear gold in any case. But that's what happened in gold. Again, it was just a paper slam down, had nothing to do with the physical demand. Physical demand continues to be strong. People actually use gold, the producers that produce it, the merchants that use it. This is just paper trading. We're going to look at the COT report next week, and pretty sure that it's going to be the bullion banks are usually the ones that when they do a big slam like this is usually the bullion banks. We'll confirm that next week, but that's almost always what it is. But there's your market update for you. You've got a nice little positive setup in the SIL for the silver miners because like I warned 5-6 months ago, or I not warned, but told you 5 or 6 months ago, when you have positive earnings, when silver gets above 20, in fact, I've been saying this for several years. I've probably written this the last 5 years. When silver gets above 20, you're going to see the miners do really well because they're going to make some profits. Because I got really lean when it was down 11, 12, 13, 14, 15 bucks under their cost to produce. Now they're printing money. They've had a couple of quarters of it. You're going to see that continue to rise. So the next earnings reports that comes out, silver company is going to be bullish. You can see that SIL start to rise. The other thing was be careful on momentum-based stocks, especially in thinly traded or illiquid stocks, microcaps or very shorted stocks. Be careful with that if they're microcaps. That's different from First Majestic. I've been hearing from some people that I know that are well-to-do investors and have really big accounts that there was a specific brokerage who I'm not going to name. I'm not going to provide names here of anything, but I'm going to tell you what I heard was happening to some of my clients, or my subs, I should say. A specific brokerage pulled, basically pulled a credit line for someone who has millions of dollars in this account, used this account for a very long time. It's a very liquid individual, knows what they're doing, accredited investor many times over, pulled a line of credit this person had, almost a $500,000 line of credit, which was equal to about the size of investment they had in First Majestic. And we were talking about it. It seems as though because there's so much shorting going in First Majestic, there's this movement, the silver squeeze movement, or to bid up some of these stocks. And First Majestic is one of these stocks a lot of people follow. They want to bid it up because there's, at one point last week, there was 23.3% of shares were shorted. And that's an exorbitant amount, especially on such a great stock like First Majestic has great fundamentals. And so there's this huge short position. And when you have this huge short position, a lot of these brokers are borrowing shares from their longs for the shorts to do it. And what we're thinking they didn't want to happen was people that had a lot of money in their account or lines of credit specifically were going to go bid up First Majestic and potentially some other shorted stocks, especially in the silver space due to the silver squeeze movement and this whole, Wallstreetbets movement. So they pulled that liquidity for two reasons. One, because they probably need liquidity to back all the potential losses they could have on the shorts on First Majestic, especially if silver stays strong, because First Majestic is going to continue to report quarter after quarter of solid earnings. It's going to drive up that price. And so they pulled this line of credit probably because they needed it to offset this potential risk they have that they've loaned out these shares to the shorters. And also they don't want people using their lines of credit to go longer on First Majestic. So people have lines of credit and are in First Majestic, that's a danger to them for a couple of reasons. And I've heard that some other brokerages are discouraging the silver trade. A friend of mine said he had a TD account and they were sending out news releases discouraging silver, saying that silver was not a good trade. It was, anyway, it was volatile. And there were fundamental reasons why silver was not a good trade. And he said he was probably going to cancel his account with them because a lot of the brokers seem to be discouraging physical silver investments and physical stock investments through various means. Just wanted to let you know that was going on. That's what I heard from two different people. It's secondhand knowledge, but I trust these people. They're reputable people. And so it appears as though some of the brokerages are getting a little worried about this silver movement. And they're getting a little worried about people piling next into First Majestic because it could happen very easily. When these movements happen, they happen lightning fast, and it could really put a lot of pressure on these brokerages who are basically financing these, by borrowing shares, financing these silver positions. It could hurt them. So in any case, I want to give you that update, guys. This is going to end it for today. Hope you guys have found this information helpful. We'll be back again before you know it with more market update information. Until next time, this is Rob Keynes of goldsilverpros.com.